Introduction. Since the beginning, the crypto market has moved in waves, something evident in the price movement of Bitcoin, the leading cryptocurrency and the undisputed poster child of the blockchain technology. However, because big banks and investment funds are now hoarding Bitcoins, retail investors have set out on a mission to unearth the next big thing that will replicate and perhaps surpass Bitcoin's wild success. First, it was altcoins, then it was ICOs, which was another name for altcoins. In 2020, it was DeFi, which is yet another name for altcoins. Today, NFTs are the it thing in the crypto world. Although relatively new, many people consider NFTs, or non-fungible tokens, the most popular crypto trend of 2021. However, unlike previous cryptocurrency trends and gimmicks, NFTs aren't rebranded altcoins with tiny tweaks and twists to make them seem original despite being the same thing. They are a unique crypto fixture with a distinct usage case and could, and likely will, stick around for a while. If you're wondering, what are NFTs, non-fungible tokens? How did they come about? How can I buy, sell, and overall invest in them? Do they have a long shelf life? You're in luck. This book will cover all of these things in detail and then some. After reading this guidebook, you will have a comprehensive understanding of non-fungible tokens, including how to start investing in them, even if you're not a cryptocurrency genius. Let's dive in. Chapter 1. NFTs, a comprehensive background. Let's jump right into it. What is an NFT? As mentioned, NFT stands for non-fungible token. When something bears the fungible label, it means it is mutually interchangeable with an identical item and has the same value as a similar item. For instance, $1 in your wallet has the same value as $1 in your friend's bank account or wallet. In this way, the US dollar is fungible. Most fiat currencies are fungible. Typical crypto tokens, a key example being the thousands of altcoins launched on the Ethereum network over the years, are also fungible. One ABC token in your wallet will be worth just the same as one ABC token in somebody else's wallet. Non-fungible items, on the other hand, are not mutually interchangeable with similar items. No matter how identical the items are, their values are different. With non-fungible tokens, or NFTs, each token is unique and has a value specific to it alone. Baseball cards are perhaps the best example with which to draw parallels. A common baseball card can and will likely be worth very little, but a super rare card can be worth tens of millions of dollars. The same is the case with non-fungible tokens. Some are worth literally nothing, while others sell for millions of dollars. One of the main reasons for the swift rise in popularity of NFTs is that it is incredibly easy for anyone, including people who are not very tech-savvy, to promptly understand just what they are about in a matter of minutes. Imagine collectibles like art paintings or baseball cards, only this time they are in digital format and stored in a token form on a blockchain, similar to Bitcoin. Essentially, that is what NFTs are, digital collectibles preserved on a decentralized ledger. The decentralized ledger, or blockchain, allows all users to witness all transactions and activity, which effectively makes it very difficult for malicious people to make counterfeit NFT and pass them off as genuine. The NFT revolution. Today, just about anything can be tokenized and then stored on a blockchain. As a result, people have come up with all sorts of innovative ways to push the envelope and make their products stand out in a sea of similar ones. That has resulted in NFTs becoming increasingly complex. Here's an example illustrating this. Vitalik Buterin, Ethereum's founder, has an NFT virtual painting titled ETHBoy. He did not create the painting, nor did he buy it or get involved in its selling process. It's just a digital painting of him. The ETHBoy painting sold for 260 ETHs, about $500,000 today, even though it's not the typical digital art piece in a blockchain. For starters, it is an interactive art piece that changes appearance every 24 hours based on external data like the price of Ethereum, the Ethereum gas fees, etc. ETHBoy is what artsy people would call a dynamic art piece. It is a complex piece of art by all standards, but it is far from being the most complex NFT, especially with so many people burning the midnight oil and pushing the NFT envelope as hard as they can. For as long as NFTs will be around, which is likely to be a very long time, they will only become more and more complex and dynamic. They will also become even more expensive. So, why would people bother paying money for this? Why ask this question in the first place? Surely the fact that each standalone NFT is unique in its valuation means that it is a no-brainer for people to want to pay money, right? Well, read on to understand why this question is a necessary one to ask, especially early on in your NFT education. A wildly successful digital artist called Beeple, real name Michael Joseph Winkelmann, has made a ton of money selling NFTs. He made tens of millions of dollars in 2020 alone and is poised to make even more money in 2021. Beeple doesn't make so much money creating and selling his pieces off in bulk form. He makes singular pieces that he sells off for millions at a time. So surely, his digital artwork must be as inaccessible to the masses in the same way a rare Monet is, right? Wrong. Here's the most bizarre thing. Absolutely anybody, including your internet-literate teenage nephew, can download Beeple's ridiculously expensive digital artwork or NBA superstar LeBron James slam dunk highlights, which the NBA has sold in NFT form for hundreds of thousands of dollars. The process is as basic as moving your mouse onto the Save Image button on the laptop screen and clicking on it. Only one person can own a particular Caravaggio or Monet art piece at a time. On the other hand, anyone can access a particularly valuable NFT online and even download a copy to their PC. That begs the question, if anyone and everyone can access and even save a copy to their computers, why are NFTs so valuable? Here is why. The evidence of ownership for that particular piece of digital art, and not the digital artwork or NBA highlight itself, is what NFT buyers are interested in and want. That is where the true value of non-fungible tokens lies, the evidence proof of ownership. Think of collectors of rare art pieces who, instead of keeping the art pieces locked away in their homes away from the public, exhibit their collection of prized possessions in public museums. Yes, you can see and thus access these art pieces whenever you visit the museum, but ownership of these pieces still belongs to the collectors. The museum will even tell you this if you ask. The owners have no problem with so many people having access to their rare art piece whenever they want. It's enough that they have proof of ownership. That is the exact case scenario with NFT buyers and collectors. That brings us to the new creator economy. One of the most awe-worthy aspects of the sweeping NFT movement is that moving forward, digital artists can now get paid for the artwork they work so hard to create and perhaps even make a living solely from their art. Because of the complexities surrounding digital art and its limitless replication potential, it has been challenging for digital artists to commercialize their works. Until now. Thanks to the blockchain technology, fans of digital artists can support and buy directly from their favorite artists without needing brokers, intermediaries, or platforms like auction houses that take out large chunks of the artist's income. Additionally, although anyone can access and save a copy of your NFT, it does not affect the value, sentimental or otherwise, of any NFT you buy from an artist you admire because proof of ownership is the main thing in the NFT buy and sell world. With all this in mind, can we call NFTs a mainstream commodity with any measure of confidence? The answer is a firm yes. NFTs are no longer a hipster thing. They are well and truly in the mainstream world now. From hipster fad to mainstream. NFTs were once a hipster commodity. Only a few people knew about them and recognized their value. To the rest of the public, NFTs were largely unknown. Those that knew about them regarded them as toys and wouldn't have dreamed of investing a cent in them. That has well and truly changed. Today, the mainstream world recognizes NFTs and is embracing them in droves. The initial NFT experiment started around 2013 to 2014, and for a long time, NFTs appeared to be little more than fancy internet things invested in by eccentrics with money to burn. However, in 2020, the NFT world exploded, and as I write this in 2021, NFTs seem poised to be around for the long haul. NFT has achieved mainstream appeal and a degree of maturity, both of which are strong indicators of a product that is here to stay. However, even with the industry achieving mainstream status, it still isn't quite as efficient and seamless as many mainstream industries. There's no doubt in anyone's mind that the technology is a long way from true efficiency and smoothness of operation, and is dogged by significant problems that will continue to undercut its growth if not adequately addressed. For instance, transaction costs tend to be very lofty, since Ethereum is the primary cryptocurrency of trade and the central network on which NFT marketplaces operate. As such, it is normal to pay up to $50 to move an NFT's property title from its developer to a consumer, which is absurd. $50 is a significant amount of money by any standard. Here's another problem. On NFT market platforms like OpenSea or Rarible, we shall cover these marketplaces in a later chapter, every transaction, including NFT creation, NFT bids, and ownership transfers, costs the buyers a lot of money and adds to the Ethereum network's truly horrible carbon footprint. The Ethereum network is notorious for heavy carbon emissions into the atmosphere. We shall cover this in a later chapter. Fortunately, there is some hope for the latter problem. The Ethereum top brass is taking steps to make the network significantly eco-friendlier by January 2022. Speaking of NFT's mainstream induction, it would be criminal not to mention the frontrunners of the industry's acceptance into the mainstream. Kings of Leon and So Rare. One is a music group and the other is a card trading entity. The two entities are entirely different, but very similar in their approach to business. Kings of Leon, So Rare, and the pacesetters of NFT. Kings of Leon, the global award-winning music group, recently released their new record as an NFT, indicating that hugely popular artists have been bit by the NFT bug too, and primed to help push the NFT envelope as far as it will go. Musicians such as Lindsay Lohan, Grimes, and even the hugely controversial and often business-myopic rapper Soulja Boy, for example, have all unveiled NFTs that reflect digital artwork, music, and copyrights of rare vinyl collections. However, NFTs aren't just for creatives and artists. The demand for digital sports cards, for instance, has well and truly blown up. So Rare, a soccer trading card website, recently sold a one-of-a-kind Kylian Mbappe famous soccer star card for a whopping $65,000. Profiting from at-home football, baseball, basketball, and soccer fans has proven immensely lucrative for such sites, catching the eye of gaming powerhouse Ubisoft, which has since struck a partnership with So Rare to take advantage of potentially lucrative ventures. Key takeaway: nothing is hotter than NFTs today, and with mainstream artists buying into them, they can only grow bigger and better. With this foundation laid down, it's time to get an education on the history of non-fungible tokens. Chapter 2. The History of NFT. The previous chapter gave you a thorough introduction to NFTs. However, to truly understand the industry, it helps to give an account of its history. This chapter gives a phase-by-phase account of NFT history through the years. Although NFTs appear to have exploded from nowhere, they have an actual history dating back several years. Without further ado, let us get started. Since 2012 was the pioneering year, it shall be our starting point. 2012. Colored coins. If we drew parallels and compared the NFT revolution to a superhero film, colored coins would most certainly be the origin film. First released on Bitcoin's blockchain for an amount as low as 1 Satoshi, the lowest unit of BTC, colored coins had many similarities with present NFTs. They were much more basic than NFTs, but their similarities to NFTs, such as each colored coin having a value unique to it, are undeniable. The initial concept behind the inception of colored coins was to harness the blockchain for assets such as digital collectibles, vouchers, real estate, company stock, and much more. However, as we've already alluded, the colored coins concept wasn't as advanced as present-day NFTs. We could even say that the creators of colored coins were merely dipping their toes and trying to get some perspective of the world they envisioned. The next major development would come in 2014. 2014. Counterparty. Counterparty is still very much alive. It is, in essence, a peer-to-peer financial network built on Bitcoin's blockchain. It is also an open-source distributed internet protocol. Counterparty was one of the first Bitcoin 2.0 sites, allowing participants to build unique, tradable assets, collectibles, or currencies. It was harnessed for various items, like meme trading, pretty much the trading of memes as observed in the Rare Pepe directory. The concept of collectibles tradable on the blockchain came with advantages that were inconceivable to real-world rare collectibles. For one, counterfeiting was impossible. Alone, this was enough to raise the excitement levels in the community. However, it wouldn't be until 2017 that the next breakthrough would happen. 2017. CryptoPunks. Taking inspiration from the Rare Pepe directory, innovative tech gurus Matt Hall and John Watkinson came up with an intriguing series of 10,000 special characters on Ethereum's blockchain, each one unique and unlike the rest of them. The 10,000 characters, christened CryptoPunks, were quickly purchased and sold online. The CryptoPunks initiative had a significant influence on the development of the present crypto art revolution. If you have a Twitter account and are pretty active on it, you can easily track the multitude of transactions ongoing on CryptoPunks. The specific characters' costs aren't as high as those of the more recent NTF creations, some of which have been commanding ridiculous fees, but it did play a starring role in establishing the template for what was to come in 2020 and 2021. However, CryptoPunks wasn't the only crypto initiative to develop in 2017. 2017. CryptoKitties. After CryptoPunks, the next major NFT initiative starred cats. No kidding. But then again, this is the internet, where absolutely nothing should surprise you. The official description defines CryptoKitties as a game based on collectible, breedable, again no kidding, and adorable beings called CryptoKitties. The description continues to say that, quote, every cat or CryptoKitty is 100% unique and belongs to you entirely. It can't be duplicated, stolen from you, or ruined in any way, end quote. This initiative, which ultimately grew into a $12.5 million venture-backed startup named Dapper Labs, was widely publicized in national media outlets and set the bar for future NFT ventures. The highest amount that a singular CryptoKitty has gone for, as of the date of this book's writing, is $390,000. 2017 proved to be a big year for blockchain because of yet another crypto initiative, one that is still going strong as ever, just like the other two. Decentraland. 2017. Decentraland. Decentraland is a decentralized virtual reality platform based on Ethereum that allows participants to purchase parcels of three-dimensional virtual space that measures 10 meters by 10 meters. In less than 30 seconds, the platform's initial coin offering, ICO, raised an eye-watering $26 million. Decentraland gamers can explore, create, collect items, play games, and much more. To give you a better idea of what Decentraland is like, think Minecraft, but replace its mob of 13-year-old gamers with hyper-uber-eccentric Burning Man enthusiasts. That should give you an idea of the essence of this virtual reality platform. 2017 was a massive year that laid the foundations of the 2020-2021 NFT breakthrough. However, while 2020 was a vital year in NFT development, the real results registered in 2021. 2021, NFT takes a quantum leap and achieves mainstream status. There is an old saying that goes something like this, quote, if your cab driver or janitor starts offering you investment tips and advice, then you know for sure that you are in a financial bubble, end quote. Similarly, you know for sure that NFTs have hit the mainstream when world-renowned rock bands start putting out records on NFT, which was the case in March 2020 with Kings of Leon, covered in Chapter 1. They were the first band ever to release an album on NFT, but they will certainly not be the last ones to do so. Jack Dorsey, Twitter's co-founder and CEO, sold an NFT of the first ever tweet, quote, just setting up my Twitter, end quote, which he tweeted in 2006 for $2.5 million. Grimes, a musician and Elon Musk's business partner, just finished selling $6 million worth of NFT art, and we're just getting started. Before we can go into the crannies of NFT, microanalyze every bit of the NFT movement, learn how to create, buy, and sell NFTs, and make projections regarding its future, it makes sense to understand the 5 salient traits of NFTs. Head on to the next chapter. Chapter 3. NFTs' Distinct Characteristics and Advantages. Chapters 1 and 2 sought to drum home the point that each NFT is distinct from all others, meaning no two NFTs have the same value. Every singular NFT has a digital hash that sets it apart from NFTs of the same kind. Owing to this particular feature, an NFT is usable as proof of authenticity. The possession and validity of a person's intellectual property, such as original works of art, is highly regarded nowadays. NFTs share qualities like rarity, indivisibleness, and distinctiveness with conventional collectibles. Let's delve deeper into this by discussing the 5 distinct traits of NFTs. 1. Non-interoperable. Non-interoperable means that the information stored in NFTs is unexchangeable. This information also cannot be used in any manner. It remains as it is. 2. Rare. While NFTs have become exceptionally popular recently, the reality is that the total NFT number in the world, especially relative to the population, is deficiently low, which makes them very rare. It also makes their value extremely high, with some going for tens of millions of dollars. 3. Indestructible. Like Bitcoin, NFTs are both stored and managed on a blockchain. Automatically, that results in a very high level of security. Nobody can destroy an NFT. No one can even remove an NFT from the blockchain. 4. Indivisible. Unlike cryptocurrencies like Bitcoin, it's impossible to send portions of NFTs to other people because, as we've explained before, they are non-fungible. They do not have a defined value, which makes it impossible to portion them out. One BTC will possess the same value it had after being transferred from one party to another. The same is not the case for NFT, which means it's impossible to trade NFTs the same way we would BTC. 5. Unique. No NFT is identical to the next. Every NFT has a value specific to it and it alone. No matter how similar two NFTs may be, each will hold a unique to it value. NFTs also operate on the blockchain technology, which is akin to a decentralized ledger where every user can track all transactions and activity. That makes it downright impossible to counterfeit and sell fakes as unique tokens because all it takes is to check the blockchain to verify the token's validity. Now that you understand the salient characteristics of NFTs, you are ready to dive deeper and learn about NFTs as collectibles and digital assets and how NFTs are revolutionizing conventional industries, systems, and structures. Chapter 4 does a thorough job of covering this. Chapter 4. The various forms of NFTs as collectibles and digital assets. The NFT market is still really young, and presently, digital artworks dominate this market. A significant number of proceeds begotten from selling NFTs have come from digital art pieces, such as Ethboy, which we discussed in Chapter 2. However, there's more than just digital artwork in the NFT market, something this book has alluded to multiple times up to this point. For instance, the NBA is making a killing selling digital trading cards and slam dunk highlights of its superstars. Additionally, musicians are releasing entire albums on NFT. All this shows that the NFT industry has very many folds to it, and there are all sorts of NFTs. Let's elaborate on how the NBA is making a killing in the NFT industry so you can catch a glimpse of the vast potential that the NFT industry has away from digital artwork. The NBA sells highlights for huge sums of money via the NBA's Top Shot package. It works akin to a trading card system, where clips of impressive highlights get sold off as NFTs. Thus far, this system has generated a whopping $230 million. A 5-second clip of NBA superstar LeBron James recently sold for $200,000, highlighting the demand these clips have. Like trading cards, the NBA franchise initially distributes these clips in packs, with the lowest pack price being $9. Buyers have no clue what the pack contents are, which adds to the intrigue and the purchase traffic. As you can tell, there is a very organized system in place here and heavy demand to boot. It should be to nobody's surprise if the NBA cracks $1 billion in NFT proceeds by 2022. The above example illustrates that while digital artwork dominates the NFT landscape, it is not the sole driver, and there is massive potential for many other kinds of NFTs to thrive in the industry. The information below shows you the various forms of NFTs as digital assets and collectibles. Naturally, we'll start with digital art. A. Digital art. Owing to the blockchain's technology capacity to guarantee the unique ownership and signature of NFTs, digital art made immediate sense in the NFT industry. Perhaps this is why digital art dominates the NFT landscape. Some digital artists have made absolute killings selling their works as NFTs. Mike Winkelmann, aka Beeple, we've talked about him in the previous chapters, is the prime example here. Winkelmann sold a digital art piece called The First 5,000 Days for $69.3 million earlier this year. He also sold another work of art called Crossroads for $6.6 million at an auction. That makes it apparent that digital art is huge in the NFT industry. B. Collectibles. NFTs can represent collectibles but in a digital format. In February 2021, the NBA sold a LeBron James Slam Dunk Highlight NFT card for more than $200,000, We touched on this earlier in the chapter. Last year, more than 125,000 NFT cards featuring still images covering William Shatner's personal life from the 30s to 2020 sold out in just 9 minutes. There are numerous examples, most of which are not as high profile or commanded as outstanding fees as these two examples. C. Games. NFTs may represent in-game assets like digital land plots under the control of gamers and users instead of the game developer. NFTs add a new dimension to games, allowing for the trading of in-game assets on third-party markets without involving game developers. For example, Axie Infinity sold digital land titles for $1.5 million. Note that they accomplished this not via multiple sales, but in a singular sale. D. Music. Musicians can tokenize their musical creations on blockchains using NFTs. We've already covered the case of Kings of Leon, who released an entire album as an NFT. Thus far, the NFT has generated north of $2 million in sales. E. Film. The film industry has been less swift to embrace the NFT boom, a fact that perhaps we can attribute to the technical issues that come with storing movies in digital format onto blockchains. The files tend to be large and ill-suited for blockchain technology. However, the industry is making moves in the NFT platform. For instance, on March 13, 2021, Claude Lanzmann's Spectres of the Shoah, a highly rated documentary by Adam Benzine, became the film industry's first ever film to get auctioned in NFT form. Industry experts expect more films to follow. F. Fashion. Like the music industry, the fashion industry has warmed up to the NFT world. In 2019, Nike successfully filed a patent that allows blockchain tech to embed cryptographically secured digital assets in NFT form to physical merchandise. Sneakers are the main player in this. They do so under the CryptoKicks name. This chapter would be incomplete if we failed to cover how NFTs as collectibles and digital assets are revolutionizing traditional industries, systems, and structures. Their salient properties, which we covered in the previous chapter, such as being non-interoperable and indestructible, have made adopting them very attractive as they offer greater security. Here are examples of how NFTs are influencing changes in various systems, structures, and industries. NFTs as a revolutionizing tool for industries, systems, and structures. NFTs are changing the following industries in unprecedented ways. A. Gaming assets. NFTs are in no way a novice fixture in the world of gaming. They're veritably well known for helping hardcore gamers solve complex in-game challenges. Mainstream games such as Fortnite prohibit special accessories such as modified weapons and unconventional skins. However, other games allow them, and with NFTs, these hugely helpful assets can be transferred directly to and utilized effectively in various games. As a result, NFTs will significantly fuel the creation of in-game economies, which will help the gaming industry grow to an even bigger scale. However, the adoption of NFTs in games is still in its infancy. B. Identity. NFTs are playing and continue to play a critical role in identity fraud prevention. Things like private medical records, academic papers and qualifications, and even an individual's physical appearance are a few examples of easily digitized items used to reflect one's identity, but that frauds with sinister motives can hijack or steal. Having such information converted into NFTs takes out the possibility of having them accessed and used illegally. C. Licensing. The licensing of software products is yet another perfect illustration of the effective use of NFTs. According to licensing experts and analysts, generating NFT-based product licenses will significantly help minimize piracy and allow developers to sell their products for profit without worrying about getting fleeced or undercut. Thanks to the unchangeable nature of the blockchain technology, pirates won't be able to pass off or sell pirated software copies as their own. Programmers and software engineers will benefit from this. The blockchain technology makes it possible for such creators to create smart contracts that will allow them to profit from resales or anything else that has the potential for revenue generation, licensing, redistribution, etc. NFT creates an incontestable win-win scenario for consumers and software creators. It also has great potential to minimize copyright infringement and piracy, while still allowing creators to profit from user purchases without any hitches. D. Performance arts. We may soon start seeing event planners and promoters giving out unique skins to concert goers. Fortnite skins, for instance, may become very popular for people going to concerts and live performances. Here's why. Recently, via collaborations with the globally renowned Worldwide Asset Exchange, WAX, to launch a blockchain drop, Canadian musician and DJ deadmau5 started actively promoting the use of NFT collectibles such as skins in mainstream music. deadmau5's NFTs will function as virtual stickers that fans can collect and trade with each other, similar to how baseball fans trade baseball cards work. An NFT chain based on the Worldwide Asset Exchange blockchain is already available for purchase, demonstrating that the industry will see a major shift, making rare music collectibles transferable from physical to virtual assets. With everything you've learned so far, you are ready for the next step in your educational journey, learning about various NFT marketplaces as well as how to create, buy, and sell NFTs. Let's get into that first part in the next chapter. Chapter 5. The Top 5 NFT Marketplaces for Novices. Everything we've discussed and learned about NFTs has primed you to learn how to create, buy, sell, and invest in NFTs. However, because of the nature of the NFT industry, it's best and logical to cover NFT marketplaces before you can learn how to create, buy, and sell NFTs. Covering NFT marketplaces before we delve into selling and buying non-fungible tokens is crucial because information on investing in NFTs dips significantly into the NFT marketplace subject. As such, it makes perfect sense to cover the marketplaces first. The bulk of NFT marketplaces require you to have a digital wallet before using them. They also use cryptocurrencies, Ethereum being the primary one, to cover purchases. Here are the 5 leading marketplaces where you can buy and sell NFTs. 1. OpenSea. Website, OpenSea.io. OpenSea is the biggest NFT marketplace. It offers a very vast range of NFTs like artwork, censorship-proof domain names, trading cards, virtual worlds, and all manner of collectibles. You can purchase, sell, and unearth exclusive digital assets. You can also purchase plots of land on Decentraland, buy ENS names, purchase CryptoKitties, etc. OpenSea features north of 700 varied projects, art, collectible games, trading card games, etc. 2. Super Rare. Website, superrare.co. This marketplace strongly focuses on being the go-to platform for people who want to purchase and sell special, single-edition digital art pieces. Super Rare describes itself as being a lot like, quote, Instagram meets Christie's, end quote. Every artwork on Super Rare is a digital collectible. Super Rare operates a bit like a niche platform, but it is so efficient that it has become one of the top NFT marketplaces. Every transaction uses Ether, ETH. 3. Foundation. Website, foundation.app. This one describes itself as a specialist platform designed to bring together crypto natives, digital creators, and collectors to move the NFT culture forward. It refers to itself as the, quote, new creative economy, end quote. The platform places most of its focus on digital artwork. Whenever an NFT sells on this platform, the owner artist makes a guaranteed 10% on that secondary transaction. In simpler terms, anytime the NFT is resold by a collector, the artist gets 10% of this new price. 4. Atomic Market. Website, wax.atomicmarket.io. This platform is a shared liquidity marketplace. Shared liquidity means that anything listed on one market will also show up on all others. This quality makes Atomic Market very attractive for numerous websites specializing in crypto and NFT. On the platform, you can either list your NFT creations or browse through existing listings. NFTs of well-known collections have a verification checkmark next to them, making it a lot easier to spot real NFTs. Any collections deemed malicious get blacklisted. 5. Myth Market. Website, myth.market. The Myth Market is a series of, quote, convenient online platforms, end quote, that support a range of digital trading brands of cards. At the time of writing this, the featured markets on this platform are gopepe.market, which is for GoPepe trading cards, heroes.market, a platform for blockchain heroes trading cards, gpk.market, where you can purchase digital Garbage Pail Kids cards, and kogs.market, a marketplace for COGS trading cards. With the top NFT marketplaces covered, you are now fully ready to learn how to create, buy and sell NFTs. The chapter that follows shows you how to create an NFT in a simple, step-by-step manner. Chapter 6. How to create NFT, a step-by-step process. Everything you've learned so far has helped bring you to this point in your NFT education. After all, before you start the process of creating, buying, and selling NFTs, it makes all the sense in the world to understand NFT on a deeper level, including the various marketplaces. Since we've already covered these prerequisites, you are ready to know how to create, buy, sell, and invest in NFTs. This chapter will focus on creating NFTs, while later chapters will focus on the other two aspects. First, creating an NFT is relatively straightforward, and you do not need to be a seasoned crypto guy or girl to create one. To get started, the first thing you need to do is decide on which blockchain you prefer to issue your NFTs. Ethereum is the obvious choice for most, but today we have other blockchains that will serve you just as well. Examples include Wax, Binance Smart Chain, Cosmos, Tron, Tezos, Flow by Dapper Labs, EOS, and Polkadot. Every blockchain has a separate, unique NFT token standard. It also has compatible wallet services and marketplaces. Here's an example. If you issue your NFTs through the Binance Smart Chain, you will not be able to sell your NFTs outside platforms that offer support for Binance Smart Chain assets. That means it will be impossible to sell your NFT on, say, OpenSea, an NFT marketplace that is Ethereum-based. My recommendation, especially if you are a novice, is to opt for the Ethereum blockchain. Why is this, you ask? Well, Ethereum has the most extensive NFT ecosystem, which will make it easier to sell your creation. Here is what you will need to create an NFT on the Ethereum blockchain. An Ethereum wallet. Around $50 to $100 in either ETH, the Ethereum fee, also called gas fee or just gas, for creating your NFT. The fee fluctuates between $50 and $100 depending on the network congestion at the time of NFT creation. That's it. That's all you need. Once you have these things in place, several platforms will allow you to link your wallet and upload the select file you'd like to turn into a non-fungible token. Rarible, OpenSea, and Mintable have a Create tab situated in the top right corner of the page. For our example, we will use OpenSea, which is presently the biggest Ethereum-based NFT marketplace. Here is the simple process of creating an NFT on OpenSea. Step 1. Click the Create button. It will be a blue button located in the top right corner of the page. While this does not necessarily need mentioning, before this step, you need to set up an account on your NFT marketplace of choice, in this case, OpenSea. Step 2. The previous step will redirect you to a screen that will request you to connect your wallet. Enter your password. Once you've done this, your wallet will automatically connect to the marketplace. Step 3. You will have to digitally sign a message once you've connected to the platform to show that you truly have ownership of the wallet. This process will not incur a fee. Step 4. Next, move your cursor over the Create button and select My Collections. From there, click on the blue Create button. Step 5. A window that allows you to upload your files will appear. Add a name and make sure to include a description. This bit is essentially you creating a folder where your newly minted NFTs will go. Step 6. Assign a file or image for your collection in this window. Once you do this, add a banner image to the page. You will accomplish this by selecting and clicking on the pencil icon in red at the top right corner. Step 7. You're now ready to create your first NFT. Select and click on the Add New Item button, highlighted in blue. You will need to digitally sign another message to verify ownership of the wallet. Step 8. Clicking on this button will take you to a new window that will allow you to upload your NFT file. It could be an image, GIF, audio, or perhaps a 3D model. Platforms like OpenSea allow you the option of adding unique traits and attributes that will boost the scarcity and unique nature of your NFT. You even have the option of including unlockable content only viewable by the NFT buyer. This content can range from passwords to enable access to special services, contact information, discount codes, etc. Step 9. The final step is to click on the Create button located at the bottom. You will need to digitally sign a final message to confirm the creation of your NFT. Once done, the artwork should promptly appear in your collection. And just like that, you have an NFT. The process of creating an NFT is truly that simple. The next part of your education is to learn how to buy NFT. Chapter 7. How to buy NFTs. The previous chapter showed you how to create an NFT in a few easy steps. This chapter and the next one will show you how to buy and sell NFTs. Again, the procedures will be simple and you only need a few minutes to execute them. NFTs are very different from most investments involving cryptocurrency. NFTs, for one, do not have value from their utility, which is the case with other cryptocurrency kinds. NFTs rather gain their value from the attached media. The most common media forms on NFT presently are digital art and music. Films are making some headway too, but it is some way behind these two. However, due to the increasing complexity and dynamism of NFTs, they have the potential to tokenize pretty much any asset in the real world. With that in mind, here is how to buy NFTs in a few easy steps. Step 1. Set up an NFT marketplace account. There are numerous NFT marketplaces, and this book has already covered the 5 best ones for novices. OpenSea is the best beginner's best choice, although the others have their advantages. Each platform also operates slightly differently from the other. The setup process includes adding your email address to receive notifications and updating your account details, including putting in descriptions, putting up a profile picture, adding in the cryptocurrency wallet address, etc. Most platforms have a simple guided registration process. Step 2. Add some funds to your account. You'll need some funds to purchase NTFs. Most marketplaces accept ETH tokens as payment currency. If you have an account that offers a cryptocurrency exchange, buy Ethereum and send it to your marketplace account. If you are a complete beginner starting from scratch, register an account on eToro or Coinbase, purchase some ETH, then send it to your marketplace account. Step 3. Purchase your NFT. Once you've funded your account, the process of buying NFT is straightforward. Most marketplaces adopt an auction format, which means you will need to submit a bid for the NFT you want to purchase. Other marketplaces adopt a regular exchange format, utilizing the lowest ask and highest bid for NFTs with multiple prints. OpenSea, the platform we used in the previous chapter and example, and the one recommended for novices, adopts an uncomplicated format where people bid with the highest bidder going home with the token. The process is that simple. Notice that this chapter does not offer any directives on how much to fund your account with. How much you are willing to spend on an NFT is really up to you. If you have the funds to purchase a $200,000 NBA highlights package, go for it. If you're only comfortable spending $50 worth of NFTs, go right ahead. As with all speculative investing, you should only ever spend as much as you are comfortable losing. One of the main perks of buying NFTs is that a lot of them have outstanding resale value. It is not uncommon for an NFT to sell for 10 times its original price. Note that the original artist will be liable to 10% of the new sales price every time a token gets sold on most marketplaces. The next chapter covers how to sell an NTF, be it an original creation or an NFT you purchased. Chapter 8. How to sell NFTs. Just like creating and buying NFTs, the process of selling an NFT is pretty straightforward. This chapter builds on the previous 2 chapters and shows you how to sell an NFT. The process of selling NFT. Here we'll describe the main steps, just as we did in the previous 2 chapters. There is no need to go into torturous detail, especially when most marketplaces have straightforward and easy-to-use interfaces. Think of selling an NFT as you would going on eBay for the first time and listing an item for sale. It's the same on a marketplace like OpenSea. For consistency purposes, and because it's the recommended platform for novices, we will use OpenSea to illustrate. Here is how to sell an NFT on OpenSea. Step 1. Set up an account. Since we have already covered account opening, there is no need to go into detail here. Again, you will have to digitally sign in once you've linked your wallet to the marketplace to verify ownership of the wallet. The OpenSea platform will ask you to verify ownership of your wallet multiple times by signing in digitally. The process is easy, and you will have a step-by-step procedure that primarily involves clicking highlighted buttons and entering personal information. Step 2. Add the item. if you are newly minting an NFT. With your account set up and connected to your crypto wallet, the next step is to list your item for sale. If you are newly minting an NFT, instead of selling an NFT you purchased, you need to add the item. We covered this in the chapter on creating an NFT, and there's no need to be redundant by going over the process again. Step 3. List your NFT so you can attract buyers. The OpenSea platform allows you numerous options for selling an NFT. It will be listed on their platform regardless, but it gives you the option of sifting through several sales styles. To sell your NFT for a fixed price and for an unlimited duration, which is the best approach for novice sellers, your NFT gets listed for sale indefinitely. You can adjust the price manually whenever you want. To offer your NFT for sale at a price that reduces gradually, you will mark the NFT for sale at a certain price, say 1 ETH, and then set a period for the listing, say for instance 1 week, as well as the ending price, for instance 0.3 ETH. Over the set time duration, the NFT listing price will steadily drop. You will have the option of putting your NFT up for auction in the traditional highest bidder wins all style, in which case you will have to set a time duration for your auction. Selling your NFT on OpenSea has numerous parallels to selling an item on eBay. Your biggest fear will be to price your token and have it immediately snapped up, indicating that your valuation was too low. On the other hand, if you price your NFT too high, you may have a hard time attracting any buyers at all. Now that we're speaking of pricing, it is necessary to put in a word about pricing your NFTs intelligently. Pricing your NFT, a succinct guide. To correctly price your NFT, you will need to base your figure on market intelligence. However, art is subjective, especially in the NFT world. In the non-digital world, only a madman or an oddly eccentric character would pay 6 figures for a nondescript block color painting. However, the artist Rothko's block color creations routinely sell for 6 figures, with some even selling for millions. Do tons of research, compare your creation with similar ones, see how much they go for, and use as many examples as possible to ensure that your pricing is as fair as possible. At this point, you are well versed in creating, buying, and selling NFTs. The next step in your NFT education will be to point you to some NFT stocks you can invest in for profit. This will set up a platform for you to make decent money investing in the industry, especially if you dedicate time to finding out about other NFT stocks that have the potential to do well and investing in them. Chapter 9. Investing in NFT Stocks. Investing in NFT stocks has made a lot of money for people who know what they are doing. However, and yes, you should consider this a disclaimer, the NFT industry is still at its teething stages and you need to be careful with your investment choices. This chapter takes a look at the NFT stock landscape and points you to several solid NFT-related stocks you can invest in to broaden your crypto portfolio and make money. Are NFT stocks the right investment for you? If someone approached you in January this year and asked you about NFT stocks, your most likely answer would have been a blank stare. That is how fresh the stock landscape is. Mass blockchain technology excitement has done a lot to drive NFT stock values up on Wall Street, and people have made decent sums from investing in them these past few months, but it helps to be discerning and careful. It's hard right now to determine if NFT stocks will take off and soar permanently. Just look at marijuana stocks from 2017 to 2019. They set off at a blazing pace only to sputter out. Likewise, the chances are high that the massive hype over NFT stocks will peter out if history proves to be a good measuring stick. However, if you peer in closely, you will notice something special brewing behind the scenes. Look at the data from www.nonfungible.com, for instance. The total value of NFT-related transactions leaped to $250 million in 2020. In March of 2021 alone, NFT-related transactions surpassed $250 million. It appears that we could be witnessing a phenomenon developing at a pace that is, quite frankly, exponential and unstoppable. As is the case with every kind of stock, supply and demand are vital drivers for NFT prices, and there is a very high demand from investors, collectors, and other persons indulging in the NFT industry. This demand has driven up the interest of investors to speculate on the potential of corporations involved in the NFT industry. Thus far, the findings have been incredibly positive. Being highly skeptical about NFTs, especially their place in the future, is understandable. But there is a lot of money to be made from the NFT industry. All you need to do is do your research to familiarize yourself with stocks that have benefited lately from the sweeping digital asset hype. This chapter will help you get started on NFT investing by introducing you to 3 NFT-based stocks that have benefited significantly from the massive interest that has accompanied the NFT industry lately. Top 3 NFT-related stocks to dip your toes in. If you're keen on investing in NFT stocks, consider the following stocks, but do your due diligence. 1. On the NASDAQ. Stock symbol WKEY. WiseKey International Holdings. That is the perfect example of a corporation that has ridden the wave of the present NFT craze, benefiting exponentially from the hype and seeing its stock value go up. WiseKey International Holdings is a cybersecurity firm that offers secure communication solutions to those who use blockchain technology, IoT, and AI tech. The WiseKey stock saw a crazy value increase in the second week of March, culminating in it rallying over 100% at the end of it. It helped that, in this particular week, the company announced that it would be setting up Wise.art, a technology that avails a digital certificate of validity for non-fungible tokens. Theoretically, it is possible to copy digital files and artworks infinitely. As such, something like Wise.art that can help authenticate and provide proof of ownership may prove very valuable moving forward. 2. On the New York Stock Exchange. Stock symbol TKAT, Takung Art. This one is a Hong Kong-based firm that provides an online platform for digital art trading. We have to mention that this company isn't truly an NFT-based one. In fact, its online marketplace does not support NFTs, and the company is yet to give any details on whether it will embrace NFTs moving forward. However, the company's stock has recorded a steady value increase this year and is something you can keep an eye on. However, the advice is to be very careful if you're interested in investing in Takung Art. For one, its stock has shown a propensity for volatility. In March alone, its stock rallied north of 1,000%, which is unsustainable, making it apparent that a dip in value will follow. 3. On the NASDAQ. Stock symbol DLPN, Dolphin Entertainment, Inc. Like Takung Art, this stock recorded a sharp climb in March 2021. It rallied over 289%, and it keeps registering steady spikes in value. Dolphin Entertainment, Inc. is an entertainment marketing firm that offers publicity and marketing services to multiple brands in the U.S. The company recently had some big news heavily responsible for the spike in stock value. The company announced that it had formed a brand new division committed to the design, production, release, and promotion of NFTs, both for itself and the firm's clientele. The company is also linking up with Hall of Fame Entertainment Resort on the NASDAQ, stock symbol HOFV, in a bid to offer NFTs that will enable professional sports fans to purchase and sell sports-based NFTs. Key takeaway: all of the companies listed here owe their market cap increase to the tremendous amount of enthusiasm for NFTs. It is not wrong to say that over 90% of their capitalization increase results from NFTs. However, even as you invest in NFT-related stock, understand that the industry, much like the larger crypto industry, is super volatile. The other thing is that the bulk of NFT companies operating today are unprofitable and will likely tumble down as fast as they came up. Of course, this may change in the future, but the reality is that most NFT companies are only good for very short-term investments, where you put your money in quickly and take it out the moment the stock registers a spike. However, the 3 companies we covered in this chapter are an exception. If you take a long-term investing approach, you'll do fine. With this out of the way, NFTs aren't going anywhere anytime soon. The industry can only keep moving forward and generating considerable sums of cash. Therefore, do not be put off by the fact that most NFT companies are unprofitable and unsustainable. We have numerous upcoming NFT-based firms that are sustainable and that follow a proper professional blueprint. Just be smart. Do your research and invest wisely. Take your time and adopt an approach that accommodates long-term investing. If you do this and use the 3 stocks covered here as your investment base, you will be fine. As always, keep in mind that NFTs and the crypto industry at large are not for the risk-averse investor. It's volatile and prone to huge swings both ways. At this point, you are well versed in NFT. The final cog in your educational journey is to learn tips you can use to win in the NFT industry and ensure you're not left holding the bag if certain NFT stocks swing downward. The next chapter arms you with practical tips and techniques that can ensure that you fare well in the industry. Chapter 10. Tips for creatives looking to break into the NFT industry. Although celebrity releases, like the music groups Kings of Leon's latest creative album release, make the big headlines in NFT, the reality is that the NFT industry grew from a small group of developers interested in new technology. Blockchain tech, in this case, enables artists to sell and authenticate digital artwork to persons all over the world in an irreversible and scalable manner. While just about anyone can make and put up an NFT for sale, it's crucial that you first consider the business environment and avenues that avail ideal opportunities for upcoming artists to interact with their fans. The point here is that NFT still largely operates as a niche industry, mainly because its founders were a niche group of people with ideas that were primarily niche in nature. Therefore, if you are to last long and make money in the industry, you need to operate smartly. Here are the 3 most important tips to help you thrive in the industry. 1. Leverage the NFT community. There is no better place to go than straight to the NFT artist community. Don't put too much stock in the mainstream artists making headway in the NFT industry. The numbers they pull for their creations draw a lot of influence from the mainstream success they've had before dabbling in NFT. The unknown artists, primarily making their bread via NFT, are the people to focus on and learn from, collectively. There are dozens upon dozens of daily Clubhouse chats, a vibrant Twitter community, etc. Use all these platforms to connect with and get advice from NFT artists and veterans who've dedicated hundreds, if not thousands of hours to streamlining their NFT activities and trying to succeed in the industry. Due to the evolving nature of the sector, the NFT learning curve has a fractured nature. It is not straightforward, as is the case with many other industries. Don't adopt a severely academic, overly technical approach to dabbling in NFT, which most people do with the regular stock exchange market. Instead, remember that it is a lot easier to hop right in and follow NFT artists you like, all while evaluating how the NFT community interacts with itself. Trying to be overly technical in an industry as new and as volatile as this one will likely lead to miscalculations and mistakes. Just leverage the community in a simple, straightforward manner. Interact with artists freely and slowly get a feel for the industry. The best thing is that since the NFT community is so small relative to other industries, people are eager to engage with each other, support one another, and learn as much as they can. Think of how small, progressive YouTube channels operate before they blow up and attract hundreds of thousands of subscribers. It's easy to get feedback from the channel proprietor and even have long, drawn-out conversations as long as you approach them with respect. The same is the case here. Take advantage before the industry becomes a full-blown mainstream fixture. DM as many artists as you can and ask for advice. Most, if not all of them, will message you back and give you as much help as they can. Engaging with the community in this way will equip you with a ton of informational nuggets that will help you lift off and soar. 2. Stay as authentic as you can with what you're offering. As is the case with any booming market, the temptation to create and mint NFTs that mirror the latest hype narrative is always there. Remember this: as the industry grows and generates considerable sums of money, incredibly talented artists keep coming to the fore every day. These artists are not jumping on the latest hype narrative and trying to skim off the top. Most of them are getting rewarded now for the sweat equity they've put in for years and years. Such artists are drawing success because they are authentic with what they are offering. Especially given how ultra-competitive the industry has become, the need to be and stay authentic is as pressing as ever. Here's the other thing. Do not get crestfallen if a certain NFT launchpad does not get back to you. Why is this? The previous paragraph partly answers this. Too many people are hopping aboard the latest, most hyped-up art kinds and creations. If you don't hear back from an NFT launchpad, the high chances are that it has nothing to do with your art or creation, but is rather reflective of the scramble many companies are dealing with in this hypergrowth period. Stay authentic and true to your offerings. However, that does not mean you should remain static. You need to push NFT boundaries as much as you can. Otherwise, you'll get left behind. But still, staying authentic will ensure that you reap huge long-term rewards. 3. Market yourself. You would think that established multimillionaire NFT artists like Beeple would be sitting back on their lily pads and staying content with their NFT passive income. After all, nearly every art piece Beeple puts out commands millions of dollars, with buyers scrambling to outbid each other. That isn't the case. Even Beeple is constantly engaging with fans on Twitter and multiple other social platforms. He's continually looking to make a personal connection with as many people as possible. He does that because he knows that this is how you make people invest in your art, both sentimentally and financially, with your creations. This is how people get to appreciate you. If you are new to this industry, take time to market yourself properly. You may need to wake up early and sleep late, but if it's necessary to engage as many people as possible, do it. Keep your fans constantly updated with your journey and indulge them as often as you can. That is the most organic way to build a fan base that eats up every NFT you create. Most artists in the NFT art space and the real world are introverted people who are far from natural marketers. Use this to your advantage. Marketing yourself does not even require too much exposure. Some NFT artists remain semi-anonymous, but make respectable figures from their creations and have a dedicated fan base. The community is super supportive, especially right now when the technology is still in its infancy. Strike while the iron is hot and make as many connections as you can. After all, a person you engage with may go out of their way to market your creations and your message, introducing you to their fans and giving you a new fan base. The first step is to make your presence known, then make a steady effort to grow and develop. Don't wait. Dive right in and establish yourself and your product. Conclusion. With everything that you've learned from this book at your fingertips, you are ready to step into the world of NFTs and make educated moves that will profit you financially and otherwise. I believe that this book has done its job of arming you with the fundamentals you need to understand and eventually thrive in the NFT world. As we part, remember that, as this book has variously stressed, be mindful of your investment choices. Take the time to research and understand the NFTs you want to invest in at any time. And more importantly, remember that this industry is not for the risk-averse. It's a volatile world filled with upswings and downswings. It's an industry with great potential for success. However, it is also possible to get nowhere, especially if you don't know what you're doing or keep hopping on the latest hype narratives without due diligence. Use this book as your foundation, then build on its contents to ensure you become a true ace in the field.